Welcome to Financial Investing Radio, where you'll learn the secrets for consistent, high probability returns in the financial markets for additional income to change your life. Grant applies consistent, high probability trading systems for the financial markets. He's only recently started sharing these tried and true market secrets. As a gift to listeners, Grant is offering his roadmap to high probability financial control. Go to financialinvestingradio.com and download yours today. Now, here's your host and trading veteran, Grant Larson.
Hey everybody, this is Grant Larson. Welcome to Financial Investing Radio. I am very excited about a special guest that I have here today with me. His name is Patrick STOCKhousen. Now, how can you not do well with stocks when you got a name like STOCKhousen? Listen to this. I'm just going to read a little bio before I give Patrick a chance to talk. But for more than 25 years, Patrick has studied the science, psychology, and behaviors of building wealth. 25 years. He has extensive knowledge and experience in behavioral finances, financial modeling, take a breath, systems development, money management, trading and wealth psychology, peak performance, and more. This guy has built his own site. It's called takingstock.biz. You got to check him out. Very successful at developing trading systems. He is a financial educator. He's a creator of more than 20 products and programs on the topic of psychology and the practice of successful trading and wealth building. Now, listen to this. Are you ready for this? He's been a former TV presenter, and he's very entertaining. You're going to very much enjoy listening to him. But he has worked with and presented with, you ready for these big names? The Market Wizard series author, Jack Swagger, former floor trader, CNBC's John Najarian, Market Wizard, Dr. Van Tharp, the hedge fund manager and Tasty Trades, Tim Knight, and international trading champion, Rob Hoffman. And one more, also he's worked with the world's #1 market timer, David Elliott. And we have him here with us today. This is really awesome. Okay, Patrick, thank you for joining.
Pleasure to be here. Pleasure to be here.
This is exciting. So I met Patrick. He and I have been going through some similar courses together and doing some trading stuff, brainstorming with each other. And he's just brilliant. Just really grateful to have you here. So you ready? I've got like a whole list of things that I just want our listeners to learn about you. You ready for this?
Yeah. Ask away. I'm happy to answer them. And pleasure to be here.
Excellent. Okay, so let's just rewind the tape. And would you take a moment and talk about your backstory? How did you get involved? I mean, 25 years you've been doing this. How did you get involved in investing and trading?
I'm going to try. Okay, brilliant. It's a good place to start. I'm going to give you the short version. I grew up poor, had no money, grew up 6 brothers and sisters in a house where there was very little money. And went to school. Teacher said to me one time, very kindly said to me, you know what, Patrick? You look stupid, you sound stupid, and you probably are stupid, right? Which I thought was a great way to inspire a child, okay? Not. Anyway, and I remember at school, I did not go to the best school in the world. I'll just put it that way. And I remember one day my dad was reading a newspaper, and in this newspaper it had this, I saw an advertisement in it because I saw it over his shoulder. I looked at it and it says, "You Can Remember" by Dr. Bruno First. It'd be quite funny if I couldn't remember what it was called, right? But and it said, if you buy this course, you should be able to read 10 packets of cards and recite them in and out of sequence, and read a whole book and recite it backwards, inside out, and meet anybody, remember their name, any facts. And I thought, ooh, you know what? If I buy that, I won't look stupid, I won't sound stupid, and I probably won't be stupid, right? So I thought, okay, I'm going to order this. So I ordered this course. This course changed my life because suddenly I was able to remember absolutely anything, read anything. You have to practice it, okay? But what was better than that wasn't just the course. It's what they subsequently sent me after. They sent me this book called Think and Grow Rich. Have you ever read that book?
Oh, yeah, absolutely. Yeah.
They sent me this book for free, and I'm thinking, I wasn't expecting it. suddenly, for the first time in my life, I read something I'm absolutely fascinated in, and then start thinking, okay, I start studying it, and there's some key lessons from it, but it's a big story, so I don't want to go into it. But I remember thinking, oh, you know what I need to do now? I'm going to go to university, get a degree in finance. So I did. Now, I go into university with a plan. I go into university because it was in the 90s. I go to university. And this is, so you got the tech boom of the 90s to the year 2000s. And I think, I'm going to get the student loans. I'm going to get every single student loan. I'm going to invest it in the markets. I'm going to create a killing. But you know what happened? I went in with a plan. I went in with a budget. And I came out in debt. I always say this. I went into university as a financial genius and came out with a degree as a retard. So it was. So what? It's true. And so what happened was, after the university thing, I went back to my studying of Think and Grow Rich. Remember some of the principles of finding a mastermind around me. Surrounding myself with some incredibly financially successful people. Started applying the information. And it's what I learned from my mastermind that brought me to the financial markets. From some top hedge managers, hedge funds were really new back then, and floor traders, options traders. That therefore that information grew into what I actually ended up doing, and then ended up setting up my own fund, etc., and brings me here to speaking to you today. But but here's a key thing. When I was Think and Grow Rich, I applied the principles from that and became a TV presenter on the television doing comedy entertainment here in England.
So it was a comedy show?
I used to do comedy entertainment. I used to do stand-up comedy entertainment, TV shows, things like that. It's just a varied career. It's mad. But it's funny because it's all come together. Because I then start trading and investing, set up this fund for years, and I sit there one day thinking at my desk, you know, one day, Patrick, when you come the last day on this earth, are you going to feel happy? You're going to ask yourself a series of questions. And here's the questions you're probably going to ask yourself. Did you reach your potential? Did you set up your family? And did you help anybody other than yourself and your family? And I didn't like the answers to that, particularly the last question, which was, if you just sit here and make a load of money, is this going to fulfill you in life? And I thought, no, it's not. And because I've been doing television presenting, and I love the talk and the chat and the communicating, but the entertainment thing was some time ago, and you get old and you just start thinking, I want to use this for something else. I then started thinking, I should combine telling people what I'm actually doing to help lots of people to help transform their financial life. So all the things, the degree, the Think and Grow Rich, the TV presenting, the trading, the investing, mastermind, those all come together to this point here, right now.
That is amazing. What a backstory. So did you say that you set up your own fund?
Yeah, I had a fund. And it was an intraday bond fund. It was brilliant until HFTs started dominating the world. HFTs. And I knew something was a bit odd. Well, it seemed to be very easy. Well, I say it was easy. I used to say that to my friends. They used to say to me, I used to sit there, I was trading for hours upon hours, back testing every single day, working on systems, working on psychology, working on money management, working on plan, running the fund. Trading, the actual trading part, is a very short amount of time. It's everything else that takes a massive amount of time. But I always remember this, putting in trades, having these vast stops, putting on thousands of contracts, and then seeing the price get executed and coming all the way down to your stop, exactly to the penny, then going up. And I thought, hold on a second, something's odd here. And then you get the book called Flash Boys, and people started discovering what was really going on in the markets. That HFT funds pay brokers to execute trades, and they know exactly where the stops are in the market.
Yeah. They can see your stops for sure. So, can you spell market manipulation?
Yes, exactly.
That's incredible. So how long did you manage the hedge fund?
5 years.
5 years. Wow.
Yeah, 5 years.
So you went through this journey, and what have you enjoyed most about trading? I mean, you're still active in it, right?
Oh my gosh. Listen, trading is a key part of who I am. I am a trader first, educator second. But I have to do both things. I just feel like if I just sit there, trade, make money, I don't feel fulfilled. If I just sat there telling everybody, and this is how you get rich, I'll just be thinking, what's wrong with you? You're a martyr or something. So I have to do both of those things in order, that sense of harmony of give, receive and give. There's two parts of every human being. There's a part of people that likes to receive, but if you receive when you don't give, you then feel out of equilibrium with everything. You then start feeling, oh my goodness, I better do something, I better give to make sure this feels fair. There's a part of people that likes to receive. If you receive and you don't give, eventually part of you is going to kick back to make you start giving. Okay, so that I like the harmony of I like to take and give at the same time. What was your question, by the way? I just forgot it once I got into I just got in there and I thought, what did he ask me? What was the question?
Good. Yes. Good. Yeah, well, so it's about trading itself, the act of trading. What do you most about that? But I think that led you into saying, well, part of it is I like to be giving as a result of my trading.
Yeah. It is. I love the educating people with it. I love the helping people. We've got like communities of people transforming their financial life, and that's a phenomenal reward, particularly if they apply it. It's kind of slightly disheartening when you start telling people things that can help them and you don't see them using it. It's almost like if you say you got children and you say to them, if you just do this will help you improve your life. What you don't generally say it in those words, but you're telling them something to help your child, and if you don't see them do it and you're seeing them suffering, that's like heartbreaking. And in some ways, it's like the students are like my children. I'm thinking, come on, you can do this. Come on, just do it. So,
of course, we always did what our parents told us, right? So
yeah, exactly.
In fact, it reminds me, I was skiing with my boys. This was a long time ago when they were younger, and one of our kids, one of our boys, he would just take off super fast, just out of control. I'd catch up to him and I'd say, hey, son, slow down. You know, it's going to be a lot more fun if you do this in control, right? And he goes, yeah, whatever, Dad. And then off he'd go again. Well, this happened 3 or 4 times. Eventually, he had this massive wipeout and skis flying everywhere and poles. And I catch up to him. And I said, hey, son. He goes, yeah, I know. It's better if I ski in control. Of course, he learned from that. And sometimes our trading's a little like that, right? It's like, someone's telling us, hey, do this, watch out for that. And we're like, yeah, whatever. And sometimes we have to have that wipeout, right?
Yep. Oh, I've had wipeouts in trading. Don't worry about it. Yeah. But when I first started, I had many wipeouts. I didn't even know what I didn't even know. Before I got wise enough to surround myself with people that knew what I needed to know. And like everybody, the general journey is, people think, if I just get a system, I will be rich. I will make a lot of money. I just need a system that works. And then I need it to tell me how to be right. It takes, I don't know, very few people are fortunate enough to come across somebody that's going to say to them, okay, you need, here's the truth of the matter. Trading never has been, never will be, and never does pay your bills. It's not designed to do that. Trading is a wealth building vehicle. Hedge funds do not expect the traders inside of the fund. Banks do not expect the traders inside of the bank. Prop firms do not expect the traders to sing and dance for their supper. They pay them a salary because they know that if they have to do that, they will be inconsistently profitable and it will screw their financial trading results up. So they pay them a salary. Trading, and then they get the big bonus at the end of the year. Trading is a wealth building vehicle. You then take that money, you buy income generating assets. But nobody tells you that.
That's right.
You know what the advert says? Leave your job, trade for 2 hours a day, and you can be free. And then they show you somebody from a helicopter trading, or somebody sitting at a beach trading, or somebody sitting at a cafe trading, and then spending the rest of the day with the family. As if it doesn't work anything like that. It's the best part-time business to do in the world that can build massive wealth. But you take that money, then you buy income generating assets to create financial freedom.
Yeah, that makes a lot of sense, because a lot of the marketing around trading is, as you pointed out, focused on profit potential. And of course, once you start to learn it, you look at a chart and you think, well, if I entered here and exited here, I'd make all this money, right? And
Yes.
you end up getting this profit-focused mentality rather than being risk-aware, right? And think about what's the risk potential, and trading with that mentality.
Yeah. Here's the other thing. People get involved in trading and they see those, go, if I just take trades like this, I could make X amount of money. But what they're not doing is they haven't developed a probabilistic mindset, whereby, which I teach people, you have to be thinking about trading in blocks of 20 or 30. So you don't win at trading because you pick the trade. And that's why people start labeling themselves, oh my God, I'm a loser. That one lost, and then they think that's themselves. They take on the identity of the result. The trade wins, so they're a winner. The trade loses, so suddenly they are a loser. Well, as soon as they do that, so particularly call themselves a loser, they're screwed. They call themselves a winner, they're screwed. And here's why. Because I know you're a man of God. I'm going to ask you a question. So I want you to be honest now. Have you ever told a lie in your life?
Yes, I have.
Right, okay. Everyone's told a lie.
If I didn't, I'd be lying.
Yeah, there you go, right? Now, are you a liar?
Yes, I've done my share of lying, but that's right. Should I identify myself as being a liar? I'd like to think, no, I'm not.
Right, there you go, right? Now, so you've lied, but you're not necessarily a liar. The second you label yourself a liar, you have told your brain, okay, act consistently with this perception of myself. Okay, I'm a liar. So your brain will start saying, oh, someone's asked you a question. You think, I should tell a lie here. Someone asks you another question. Maybe I should just lie here, because you're being consistent with your perception, right?
Right.
Now, here's the thing. If you call yourself a loser, your brain's going to say, okay, right, well, we don't want to make you a liar about this whole scenario. Let's be consistent with our perceptions. So we're going to help you to lose. And that's what the brain does. Now, when the person says, I'm a winner, they start trying to be consistent with that perception. Works great in life, terrible in trading. Why? Because you put a trade on, you don't win because you put that trade on. You're not big enough. When I was running a fund, I could move the market a massive, staggering 2 points.
How did that go?
That took thousands of contracts to move that bond market up 2 points. Like, so makes sense. You don't win because you put that trade on. It takes massive amount of big money to come in to move the market in your favor. Your job is to identify something that's likely to work over a series of trades. You don't win because you put it on. You won because somebody else moved it in your favor. So your whole goal is to go, right, I'm going to develop a system which says smart money is likely to come in probably more times than they don't, or when they do come in, they move it massively compared to how much I lose. Richard Dennis turned $1,500 into $200 million. Some reports say 400 million by being right 35% of the time.
That's it. Wow.
Right? So he didn't win because he put the trade on. Big money comes in. Goldman Sachs came in. Does that make sense?
Yeah.
Lehman Brothers, when they were there, when Richard Dennis was trading, came in. Big money came in and moved the market in his favor. So the second you start saying, I'm a loser, you've screwed the whole thing up. Your whole goal is you are a probabilistic mindset thinker, where people have the opposite mindset to how a casino works. In a casino, what happens is people, I have been to a casino once in my, just to see why people actually do, oops a daisy, just to see why people did it. Because it never made any sense to me, because I kept thinking there's no odds in my favor, and the only person that wins this game is the casino, right? Now, you put the money in the casino machine, slot machine, you pull the one-arm bandit, and then it says 3 bells, and then you win. Okay. Now, trading is the exact opposite of that. it says 3 bells, i.e. your signal. You recognize that's my signal. You then put your money in, pull them thing, and then it says, no money. You think, what? How come I didn't win? It's because it's only going to win, and this is how trading works. It shows you your 3 bells. Let's imagine your signal is 3 bells. 3 bells. Put my money in. Pull it. You don't win. Put the 3 bells. Put the money in. No win. Put 3 bells. Put the money in. 6 times back what you put in. You're ahead. Does that make sense?
Yeah.
Trading is you identifying your pattern and knowing you are going to win in a series of times. So if I said to you, right, play this one-on bandit game. Every time 3 bells come up, you put $1 in. If it works, you're going to get 10. If it loses, you're going to lose the 1. But here's the deal. You're going to play it 100 times, and you're probably only going to win 50. But I can't tell you which 50 you're going to win. It's going to be a random distribution between the one when you're going to win, when you're going to lose. You know it's going to give you an edge in the system. We know there's a super high probability of you doing it. So that's all trading is.
Well, that's a huge psychological sort of gap that I think a lot of traders don't have, right? I mean, because we hear so much about, just trade and grow rich, right? Instead of think and grow rich. That's sort of the mentality out there. So what do you like least about trading?
I love trading. What do I like least about trading? Okay, let me think about the components of trading. Do I like systems, developing systems? Yes. Do I like the money management component, which is really how you actually achieve your objectives? Yes. Do I love working on my psychology? Yeah. Do I like working on my business plan? Yeah. I guess I like all of it. I do like all of it. What I never used to like was this, and I can tell you that. Right, here's what I can answer your question with. I tell you what, there's a great book. I don't know if you read it. It's by Nicholas Darvas called How I Made $2.5 million in the Stock Market.
No, I've not read that one.
Oh, read the book. Brilliant book. Nicholas Darvas was a dancer. He was was a dancer by day, and what happened was somebody didn't have enough money to pay him for something for his dance show, so they gave him some stock. So he bought this stock. He gave him $5,000 worth of stock. This stock then goes up in massive value, and he thinks, whoa, that's brilliant. Cut a long story short, he then decides, I'm going to dance during the day. I'm just going to trade at night. He spends the evenings reading books. He doesn't speak to the broker. He's away from the city, the financial center, and he just doesn't want any communication from the brokers at all. Just send me a telex. He looks at the price, executes, puts them stops in, and he just dances during the day. This guy then turns a small sum of money adjusted to inflation into 15.25 million today, okay, in 2.5 years. Now, what did he do? Here's a good thing, what he did. One, he captured the longer term trends in the markets, and most people are trying to capture tiny, small sums of money in the market, and they're wondering why they're not winning the game. And secondly is this, and this is the big thing. He traded around his ideal life. Now, what do most people do? And this is a mistake what I did. I thought, if I trade intraday, when intraday worked, if I trade intraday, I will make loads of money, and then I can lead my ideal lifestyle. Well,
Right.
do you know what? You've just screwed yourself over. Because if you trade in a way that fitted your ideal life today, right? Most people would say, if I could trade just a few hours in the week and look at the weekend, you'd be more successful. So what don't I like about trading is how it's advertised, and it's not trading per se. It's marketers saying to you, just trade around this, do this all day and say goodbye to your boss and all these things which makes people then think, I'm going to do short-term day trading. I'm going to spend my whole days doing this, and then I can have my ideal lifestyle. You're now trading in misalignment with who you are, what you value, what's most important to you, around your fundamental beliefs about your real model of how you believe the world is supposed to work. That will mess up your trading faster than absolutely anything. You could give them a profitable system, but if it's not aligned with their values, and I'll tell you what I mean by values in a second, you won't be able to do it successfully.
So the real takeaway there is know thyself, right?
Know thyself, be thyself, love thyself. It's the secret to financial success.
So tell us about values.
Right. I first, because I used to teach NLP with the guy who invented NLP. I was obsessed with psychology of how your mind works. But I really learned something about values from someone called Dr. John DeMartini. And I always remember hearing him saying this. And I thought, that's it. I was always looking for this because I knew what values were, I knew how they worked, but not to the degree that I started when I started really studying and working on it. And it was this, that my wife has a set of values. And when I may say values, I mean what she values, what she perceives to be most important to her. Right. So for my wife, the children's education, the children's entertainment, shoes, and the gym, right? Well, if we had to label these things in order. Now, let's imagine that's that hierarchy of her order. Let's imagine then there's me, and I'm thinking developing my financial mindset is first. Educating people, trading, managing money, family, stuff like this is my hierarchy of my values. Now, you could put my wife and myself in the exact same environment and we will see two completely different things based on our values. What my wife is going to see the second she goes into the shopping center is, oh, look at those children's clothes. Look at those children's books. Does that make sense? That's what she's going to see, right? Because your values will determine what you see, your decisions, and the actions you consistently take.
Right.
I am going to say, look at those books. Look at that book by Think and Grow Rich, Napoleon Hill's book. Oh, look at that new book by Robert Kiyosaki. Oh, look at that book about developing your financial mindset. Oh, I could buy that. Look at those monitors. Oh, I could set that up in our house that's in the other place. Your values will determine what you see, act, and the decisions that you make. Now, here's a key thing. You give two people money, they will spend it in alignment with their values. So, give my wife $100,000 or pounds here in the UK. What's she going to do with it? Children's clothes, children's entertainment, children's shoes.
No trading books?
No trading books. No, does that make sense? Give me 100,000. Where's it going to go? Oh, I can expand my mind. I can learn even more. I can help people grow my business. I can grow my wealth, my investment. Does that make sense?
Yeah,
you
absolutely.
Spend money in alignment with your values. You save money in alignment with your values. And what I mean by that is this. If you do not have, and this is one of the most desired goals people have with trading, that's a lie. I was going to say most people desire to be rich. No, they don't. They have an income, desire for an income to replace their income. They have a desire to have money for a particular lifestyle. But then they think, why am I not rich? And the reason is because they don't have high on their values, saving, investing, and wealth building. And I go, but I'm trading. Trading is not wealth building unless you have a value on savings, investing, and building wealth. Most people are trading to have money to spend. So the thought is that in their mind, as soon as I get money, I'm going to spend it. I'm going to give it away. Who are they giving the money to is who's doing the wealth building, potentially. If you give the wealthy person who has assets the money, they will save it, they'll invest it, and they'll grow wealth. So what happens is the person that's got a high value on saving, investing, and growing, building wealth will save the money. The person that's got a value system like my wife, children's education, children's entertainment, things like that, the house, she'll give the money. But what she's giving the money to what's truly most important to her.
That's right.
Does that make sense?
Yeah.
Yeah, to her values. And I'm not saying that's right or that's wrong, but you've got to work out what is your goal. Is your goal to have money to give it away, or is your goal to become financially free? Because if you want to be financially free, you're going to have a value on saving, investing, and building wealth and owning assets. And most people, in fact, only 1% of the world has a value system that is aligned with that.
Yeah, because they get this whole profit potential in their head. They decide, hey, I'm going to get the money, I'm going to spend it, like you said, and it doesn't go to the wealth building. So what do you trade with this mindset? What have you done? What is it that you trade?
It's funny, someone asked me this the other day. Says, do you trade options? I say I use options. So you're an options trader. I said, no, I use options. I use stocks. And they said, what do you mean? What's the difference? And they said, options are an instrument that you apply to an opportunity. A mortgage is an instrument that you apply to an opportunity. A mortgage will not make you rich. An option will not make you rich. Your ability to see an opportunity and apply the correct instrument to the opportunity and manage the trade and profit from the trade is what gives you the profit potential, right? So what do I trade? Generally, because I used to be doing the short-term bond fund. Now it's just basically I look at stocks and options on monthly, weekly charts, holding things from 3 weeks to some positions. The SPY and things like that. We've been in long that since 2011, and just like going, whee!
Yeah,
Yeah, so that's the longest thing I've got on at the moment. But generally things for like anything from 3 weeks to a year. And it's just basically, I don't think of, I do equities or in just stocks. I generally look across all asset classes, but use options and stocks across all the asset classes. From you're looking at bonds, property, commodities, metals, individual stocks, and indexes.
Oh wow. Okay. So you've characterized your trading approach, and you tend to do I guess anywhere from a swing position to even some long-term stuff, right? You got since 2011. So you've shared some key lessons that you've learned over the years, specifically around aligning your trading style to your values and knowing your values. What are some other key lessons that you've learned over the years you'd like to share?
Let me think of it this way. The system, let's think of it this way. Let's imagine you've got 4 types of objectives. Let's imagine somebody's objective is to shoot for the stars. Somebody else has an objective of, I just want to make 30%. Someone else's objective is, I'd like to make 30%, but not lose 20% from the initial equity or from or 10% from any equity high. And someone else says, I just don't want to lose 30%. 4 completely different objectives. So let me just change those numbers a bit. Shoot for the stars. What's to shoot for your stars? I'd like to make 1,000%. Next person says, I've got a goal. What of? I want to make 100% return for the year. Next person, I want to make 40% but not lose 20%. Another person says, I just don't want to lose 30% of whatever I start off with.
Okay.
Now, most people think, okay, it's my system that's going to enable me to achieve that. Nope, it's not. It's the money management strategy. Mm-hmm. Money management will determine whether you achieve your objectives or not. You apply money management to a system. There's different money management models. There's different elements of money management that will determine how you achieve the objectives. There's too much to go into it in order to actually explain it now, but money management is the key secret to how you manage a trade. The basic money management model would be, I'm going to risk 1% of my account. Okay, that's the absolute basics of money management. But there's different money management models which determines how much of your money you could risk, or how much of the profits you risk versus your initial money that you risk, and how you scale in or not scale in, and what's the maximum exposure before you're actually hedged in the market, or how much you are risking correlated and uncorrelated markets, on so many different key things, which will determine whether you achieve those objectives. You could have the exact same system doing the exact same thing, but you apply a different money management model, which will enable you to achieve each of your particular objectives that you truly desire.
Yeah, have you found that you apply different money management models based on your trading or your objectives?
Yeah, it has to be. That's the only way you can do it. Yeah. You cannot have. And what's interesting is this, and you see this. You have people taking, let's say somebody's a fear-based, and I don't mean for a bad reason. Let's imagine that they are, for them, they think, I just don't want to lose 30% of my money. Okay, and that's what's going on in their mind. And then somebody like one of my customers who will, he's not afraid of losing. nearly said his name then. He was in Vietnam. And he says, Patrick, when you've had tracer bullets going over your head and you've seen your friends have horrible things happen to them you don't worry about losing a bit of money in the markets.
Yeah, right.
So he will shoot for the stars. And I've seen him do 1,000% in a year, right?
Oh my.
Now, here's what's interesting. The person is a real person who's scared of losing 30%. It's actually probably 10% is probably scared of losing. Then looks at the person who's made the says, how can I do that? And the sad news is he can't. Because in order to go for the 1,000%, the equity swings that he'd have to take in order to do that is what the person who's scared of losing 10% wouldn't be able to tolerate.
Mm-hmm.
So your psychology is going to determine which objective you choose that fits you. So you, in the same way you have to, as I say, you trade around your lifestyle with who you really are, what you value. Your money management must fit you. Your system must fit you. The plan must fit you. It is a tailored thing to fit you.
Mm-hmm. Right. So that's a powerful lesson learned. Let's say that I was one of the brand new people, right? In other words, let's say I hadn't done any trading and I wanted to get started. How do I get started with trading? What have you seen? What do you guys apply?
Let's think about it. It's been some time since I would, number one, as in anything, and as you and I know, because we're doing some education about how to expand our reach and help more people in the world with what we're doing, is you find a mentor of somebody that knows what they're doing, somebody that's got a track record. Because you're not going to learn this from a book. You're not going to learn this from some one weekend course. I've met people that said, I went on this course. It was on a Friday and a Saturday. I'm going to build massive wealth. And you think, if only it was that way. There's a reason. There's a reason why the training at Goldman Sachs is as long and as extensive and as expensive as it is. They're not just giving this money away. And people, it's like almost like you think, oh yeah, if I said, I went to this weekend course about how to do brain surgery or operate on people. Yeah, I'm ready now. I'm ready to take it all on. Get out of it. You're not operating on me. But yet, that's what people are doing. Yeah. And you know what I generally say to people? If you knew somebody that looked like you, sounded like you, acted like you, behaved like you, smelled like you, dressed like you, no one would know. Your mother wouldn't even know it wasn't you. Would you give them your money and go away for 3 years? Would you expect if you came back to have more money, less money, or the same amount of money? Most people say, no, I won't give them that money. No way. And you go, well, that's what you're doing with your money right now, because that person's you, right? So the thing is, one, find a mentor, someone who's going to show you. And if they need to show you systems, money management, business planning, and psychology, in order to do this.
Yeah, because you got to know that part. You got to know who you are, like you said, in terms of your ability to trade successfully.
Yeah. And then I would set in my head a realistic timeline of how long this really takes to learn. How long does it take somebody if says, I want to be a quantitative surveyor? How long? This is a profession, right? It's not as simple, because what people mistake is, all I've got to do is click this mouse. And they think, so the ability to do the activity is easy. And because the ability to actually get involved in activity is easy, they mistake the ability to be successful as easy. Whereas you can't just do property development. There's a barrier to entry with property developing. You need a big deposit. Trading, you can put, depending upon which country you live in, you could put £100 in some UK brokerages and start getting involved in it and buying some penny stocks and things like that. Mm-hmm. And people mistake ease of access to ease of ability of successful results. No. Mm-hmm. Yeah. So you need a realistic timeline of how long is it going to take me to actually do this?
Yeah. And that always gets muddled because of all of the profit potential marketing that comes out there, right? You get excited because you see the lights, right, and the flashing signals and the bells. That aspect of trading sort of muddles the water and makes it hard for people to do that. So I have one last question for you, Patrick. You ready?
Go for it. Yeah.
All right, this one might sting a little. You ready?
Oh, God, go on then.
What was a painful trading experience that you had? What did you learn from it? Any sort of, because I'm looking at Patrick and I'm thinking, this guy's a guru on the mountain. Is he really human? Have you ever had a painful trading experience?
Okay, when I first started trading and then didn't do all the things I'm telling you to do, I remember funding my account 5 times, many times. But I was resilient because I wanted to master it. And the reason why is because when I was younger, my mother, I don't know where she got the money from because we didn't have any money growing up. But my mother bought me a computer it was an Einstein. It was called an Einstein. You look it up, it's some old, big, massive thing. And you have to load DOS onto the computer first, MS-DOS, and then you put this game in it. And it came with one game, and it was a stock market game. And I thought, I like this game. Surprise, surprise. So a series of events have led me to this. My name's STOCKhousen, which means storehouse of stocks. Right?
In fact, when I first met you, I asked you, is that a stage name? Or
yeah, I remember you saying that. He said, is that your stage name? No, that's my real name. I learned painfully that. Now, one of the worst mistakes I actually did was this. It was when I had the fund. I took on some terrible clients and some good clients and some bad clients. And I always remember hearing this lesson. And it says, never, ever, ever mix good money with bad money. And now I've got to be very careful what I say here for legal reasons. But I took on some clients a particular one that I wish I did not. And their psychology and their ability to access me and constantly say things to me had a tremendous negative effect on my financial trading. That compounded with at a particular time. Here's what happened. So I had this particular client, and their percentage of the money that was in the fund was tiny compared to everything else. But their negative, because they were a trader as well, but they were doing short-term things. But every day, finding out, going, oh, I'm going to lose money, I'm losing money, I can't take this, I'm losing money. And I'm saying that in my head every single day. Whoa, lie down with dogs, you come up with fleas. So that happened at a time in my life when, I developed an overactive thyroid. My mother died. My father-in-law's empire went, right? Oh, wow. So it was absolutely terrible that. A baby was born.
A lot going on. Yeah.
I had a lot going on, and I saw my equity in the fund go.
Ouch, ouch, yeah.
So we were like flying to.
So can you do that one more time, Patrick?
So have I had some back? Oh yeah, absolutely. Took years to rebuild that back. Years, absolute years. And that was the time when HFTs were people just realizing what's going on with these HFTs, what's going on, and then that book comes out. And then people start working out what is going on. Lots of insiders had no idea how the markets were being manipulated and things like that. Mm-hmm. So, it took me years. And then I had to developed a family, like I make them upstairs in the factory. Had a family, and I had to fit trading around me, the new version of me. So which is now, I'm trading now. My trading is 30 minutes a week. 30 minutes. It takes me to look at the markets, get into the market, take trades, but yet the returns that we are making is astronomical. I don't want to do any sort of advert for. Here's what we do. No, listen. I'm saying what I do. I trade 30 minutes a week. I look at the markets. I like to do my tests and things like this, but I've got all my other values. I want to make sure they're all in place. So I want to make sure my learning's in place. Spending time with my wife, spending time with my boys. And educating my boys and making sure I'm just not allowing the education system to take care of their education. I want to make sure that they are financially literate and aware and not make the same mistakes that I used to make in my life. So if you ask my kids now, what do you invest in? The youngest one will say stocks, property, and someone else's businesses. and they're 6 years old. They've got investments in stocks and property and businesses. they know. You say, if you want a television, I want to buy that, Daddy, and go, which one does that come out of? Because they've got 5 piggy banks. They've got for 5 different activities, and go, that comes out of my spending myself money. I need to buy Xavier a birthday present. Where's that come from? Presents for others money. I want to give some money to that charity. Where's it come out of? Presents for others money. So they are financially far more advanced than I ever was and probably ever will be. They just get it. They don't challenge it. They don't question it. They haven't got the belief systems, and they haven't had the media putting a load of rubbish in their head. So the question was, are there any that make any mistakes? Yes. Biggest financial mistakes was, 1, for me, going to university, going in as a genius, coming out as a retard. 2, not recognizing you should not take that bad money, Patrick. 3, don't trade when you got terrible stuff going on in your life, Patrick. 4, make sure you're trading in a way that fits your lifestyle. 5, is this aligned with this activity, who you want to be, what you want to do? So, yeah.
Yeah, those are powerful. Those are incredibly powerful. Patrick, you've been very gracious with your time today. Thank you so much. Before we wrap up, any parting words that you want to share with the audience? Take care of your, no. I was going to try and think of something really smart and clever then, and you put me on the spot, and I thought, yeah, I was going to say, and then I thought, no, I haven't actually. Yeah, okay. Patrick Stockhousen telling you to take stock of your financial future, because you're going to be spending the rest of your life there. Start taking action by taking stock now. See, you had it. It was in you. There you go. All right. Hey, thanks for joining. Everybody, thanks for joining this episode. And until next time, know your values.
Thank you for joining Grant on Financial Investing Radio. Remember to subscribe and leave feedback. Don't forget to download your free roadmap to high probability financial control before you make an investment decision. Visit financialinvestingradio.com now.